You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, a program where we break it all down on the other side of the options fence. We're going to talk commodities. We're going to talk equities. We're going to talk some FX today. That should be fun, and a whole bunch more. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Hopefully you guys are enjoying the slew of content that has been hitting you pretty much twice a day, every day this week. Remember, if you like what you hear, keep those reviews coming. There's so many new folks out there discovering the network every day in these troubled times. Help them find a good place to turn to, so leave those reviews in your platform of choice. Keep those questions coming, too. We do love to hear from you guys. And let's see who we're hearing from on the old TWIFO program today. First, let's go out to the FTSE Russell hot seat, where I am joined once again by my old friend out there, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to TWIFO, sir.
Mark, it's great to be back. Looking forward to having a great show today. It's getting exciting. These markets are all keeping us awake and alert. So it's going to be a great show today.
Yeah, if you were sleeping earlier in this week, the markets certainly woke you up. A lot to pay attention to this week. And helping us do just that, holding down the CME Group hot seat this week, is Mr. Craig LeVeille, the Executive Director of FX Products over there at CME Group. Craig, welcome to the TWIFO program.
Well, thanks, Mark. It's great to be on the show, and thanks for having me.
And Craig, I know you've been on some of our other programs in the past, but it's been a while since you've been on the network, and I know you've never been on TWIFO before, so maybe let's start there. A lot of new listeners have discovered the program and indeed this network over the course of 2020. So why don't you give our audience a quick overview of your background, as well as what it is that the Director of FX Products does day to day over there at CME Group.
Well, happy to. My background has been a long time in the FX market. I actually started on the floor of the Board of Trade in the CME in the early 90s. I traded both soybean options, bond options at the Board of Trade before switching over to CME, where I focused on FX options ever since. Following, being on the floor for about 5 years, I went upstairs with a couple of different banks for a period of 15 years where I traded OTC FX options and advised clients on strategies. And then I decided to join the CME group, the FX team on the CME group, and I was responsible for managing the FX options product line ever since. So it's been long career in FX options, actually.
All right, I'm looking forward to diving into FX options. Don't get a chance to talk about them all the time here on TWIFO, so that should be fun. But before we do that, let's kick it off the way we always do with the movers and shakers.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody. Like the man said, it is time for the movers and shakers. We break down all the big movers to the upside and to the downside, a.k.a. the light side and the dark side at CME this week. It's kind of easy this week, actually. There's not a lot of light side on the screen. There's barely a top 5. It's pretty much all dark side. So we'll get rolling there really quickly. We'll start to the light side first. You guys always ask us about Bitcoin. It's not even in the top 5 this week. It's only up about 0.25%. So that puts it at number 15. It was number 1 to the light side, though, last week, followed by number 5. Going out to the rates complex. You got the 30-year up a little over 1%, about 1.07%. Followed by number 4, the Ultra Bond, up there about 2.08%. Number 3, Live Cattle, up about 2.5%. It was number 1 in the opposite direction last week, number 1 to the dark side. Followed by number 2, Iron Ore, up 3.13%. That was number 5 to the upside last week, up about 2.8%. Again, not a huge option story there. A lot of these names in our top 3 of the top 5 anyway, not huge options names. Number 1 is actually feeder cattle. We broke down a little bit of livestock on the show last week. It's an interesting, if not esoteric, corner of the futures options market. Feeder cattle up 7.13% this week. It was number 2 in the opposite direction last week, off nearly 5%. Now let's go to the dark side. We got to stop outside the bottom 5 really quickly to the number 10 spot. That's where we find the Russell 2000, off nearly 6%. 5.81%. It was number 7 to the dark side last week. That usually, off nearly 6% in any direction, is usually going to be enough for probably the number 1 spot. But that shows you how much red is on the screen over there at CME this week. It's pretty much 80-odd% red on our movers and shakers report this week, listeners. Number 5, it cost you nearly an 8% sell-off to break into the top 5 this week. That gets you to palladium, off 7.98%. Number 4, heating oil, off 9.12%. It was number 5 last week, off 2.5%. Number 3, RBOB, getting a little bit of a theme here, I think, off 9.96%. Number 2, our old friend WTI, off 13.5%. That's just a drubbing. That would usually easily be enough for the number 1 spot, but not this week. Brent actually taking the top spot, off almost 18.25%. So a lot of red on the screen. There's a lot to break down. But as I mentioned, Craig is our guest in the CME hot seat this week. So I think let's kick it off in his neck of the woods. Let's talk a little bit of FX.
The dollar, the euro, the yen, and more. It's time to explore what's happening in major currency options around the world. It's time to talk FX.
All right, Craig, now is that time, that moment you have been waiting for. Of course, FX is your domain, your purview over there at CME. As I said before, we don't get a chance to talk about them too often because it's not often that the FX names really break into our top 5 to the upside or to the dark side. But I like to have a chance to shine some light on different categories and complexes every now and then. So let's start there. Craig, obviously you've been watching over all things FX this year. 2020 has been, I think, unprecedented by just about every measure you could possibly have. So break it down for our audience. What's been catching your eye, and what are some of the interesting trends and developments you've seen out there in FX options this year, sir?
Well, certainly, I mean, and the reason where we don't break into your dark side and light side, I guess, is, we've seen a longer-term downtrend in FX volatility over the last couple of years, and it culminated into a multi-year low in January of this year, with the GPM G5 index dropping, below 5%, and then COVID hit, and sort of the pandemic really didn't create that much volatility in FX, and I think one of the big trends right now is, of course, the compression of the interest rate differential in the major currencies, and so that doesn't tend to lead to big FX movement. But, it'll be interesting to see what happens in 2021. I think some are predicting that FX volatility, could come back in a big way. There's some perceptions that maybe this could be related to perceptions of the, ballooning deficit and potentially a big move in the dollar. So it'll be interesting to see. We're certainly, very interested and focused on that. And then from a more macro structure perspective, and and maybe the viewers, aren't in touch with the regulations that are coming in play. And so, one thing that happened this year is over the past few years, there's been a regulation called the uncleared margin rules that have been put into effect, and basically it requires participants who trade FX OTC on a bilateral basis to basically put initial margin and variation margin when they trade. So that will make the OTC look much more like the exchange. And this regulation was postponed this year just because of the pandemic, but it goes back into play over the next couple of years, where firms that have in 21 $50 billion in exposure, and in 22 it drops to $8 billion in exposure, will now fall under the guise of this regulation and will need to exchange initial margins for derivatives positions that are not cleared. And so it'll be very interesting to see, how these institutions, which may be as much as 1,000 institutions being captured by this regulation, how they react to this regulation. And clearly we're very optimistic from our perspective, where we feel we're well positioned because our listed options and our OTC clearing solution can provide very capital efficient solution for these regulations. So that's kind of the two main developments that I foresee in the next year or two.
Well, you talk about that OTC business. Obviously, that's a very big part of the FX options landscape. We talked about it earlier on the show when you guys initially launched it. This is, of course, your FX volatility converter tool, but this is squarely aimed at that audience, allowing them to effectively help convert some of those OTC positions into what you guys have listed over there at CME, drive some of that OTC volume into the listed space. It's been a little while since we talked about that tool. So maybe, Craig, give our audience a quick overview of what that tool is, why you guys launched it, and how the response to it has been so far.
Well, the response has been really strong. We've had, over 2,000 unique individuals kind of visit the tool, and so we're very happy with the response that we have. But let me explain the tool for the audience. And to explain the tool, it's important for the audience to understand the difference between FX options traded on the OTC and the listed futures options at CME. The convention on the OTC is to trade options on spot, and traders tend to trade in volatility terms, whereas on CME, the options deliver into a future, and we trade in premium terms. So there are some major differences between the two options, even though they behave very much the same. These differences make it difficult for, traders who are not familiar with the CME convention to analyze, the prices at CME and be able to make a decision as to, maybe they have a better opportunity to trade on listed options because the liquidity is better. And so this tool that we've created basically makes, this conversion. It takes all of the rules of the CME and unwinds these rules to create an OTC equivalent volatility surface. We use a Sabre model to try to create a continuous surface, and then we present this volatility surface in the terms that OTC traders are familiar with, which are buckets of, set tenors and set deltas. Usually it's 1 week, 1 month, 2 months, 3 months, and deltas of, 10, 25, and 50 for the at the money. And then they like to see volatility, the price in implied volatility terms. And so we do all these calculations, and we take snapshots of the thousands of prices that are being streamed on all of our strikes and dates, and we create this surface, and we then present it in a very condensed format that OTC traders are familiar with. And so it makes it a whole lot easier for these participants to look at our prices and find opportunities that they, wouldn't be able to seek before. And the tool really helps them to find these opportunities on CME. And so we're very excited about the tool. We think it provides, a great transparency between the two markets, which will allow these participants to optimize their execution and hopefully trade more CME options.
Well, CME certainly has a history of creating tools that people get excited about. The FedWatch comes to mind. A lot of our listeners like to use that tool. Maybe a little bit less now, not as much going on in FedWatch land as there was, but it was pretty hot and heavy there for a while. So these tools can certainly generate a lot of traction. How has the uptake been? Have you been seeing a lot of people using this tool so far, Craig?
Yes. Again, we've seen, good flow to our website where we have the tool. It's free to access. Of course, on the website, it has, delayed market data, but you still get, very strong representation of the prices that are available on the CME. And, we have the same tool available via our CME Direct platform with, of course, live access. And so we've seen, a lot of participants, come back to the website or use the tool to inquire about the prices. And so we're very excited about the early uptake in terms of, the reception of the tool by the greater market.
And Craig, since we have you on, since we're spotlighting FX a little bit, I thought we'd run down some FX options activity. I pulled up the Euro USD here. You think we should start there, or is another one you think we should start with this week, sir?
No, Euro USD is a good place to start. With the elections coming up, it's definitely, the election sort of impact the greater dollar, but Euro being the main currency traded globally, I think it's a good cross to start with.
Speaking of the election, have you seen any interesting developments or uptakes recently, maybe from a volatility or a volume or OI perspective, that maybe you could trace back to the election, driving a little bit of action, a little bit of paper there, Craig, in FX?
Yeah, it's hard to say that, it's definitely created by the election, but we've seen some activity in some of our shorter dates, which, we've introduced a lot of Mondays, weekly Mondays, weekly Wednesdays, and Fridays to provide more flexibility for clients to trade these short date events. And, we've recently seen some sort of shorter dated action in Euro on the low delta puts, whether that's, in anticipation of the election, it's hard to tell. Obviously, I couldn't sort of make that clear connection, but it's been some good activity, and there's been some pickup in sort of this sort of trading, and it's been interesting to see, for instance, and I would basically tell the audience to go look at some of the tools that we have on our website, which basically, it helps you analyze some of the open interest, but also, the sort of the risk that is built into the event. So, for instance, yesterday I was looking at a tool we call the Event Volatility Calculator, and basically it uses options implied volatilities around the specific event. to calculate a forward volatility that is built into the event. So I plugged in, November 3 in the calculator for Euro USD, and basically it was interesting to see that the implied forward volatility for that period of time between our Monday expiry and our Wednesday expiry generates a 22% implied vol. So that is almost more than twice the volatility of the individual contracts, right? And so this kind of gives you a good indication of how traders are perceiving the event, how much risk they're building into the event. In this case, that 22% implied vol, translate into a potential range of about 270 ticks. And so, information like that can really help options traders, prepare for events and put together an appropriate hedging strategy.
All right, let's see what action we're seeing out here in the Euro USD this week. Listeners, as always, you guys can follow along, generate your own reports completely for free. You know where to go, cmegroup.com/TWIFO, TWIFO, or /TWIO. If you want to get to exactly where we are, go to the FX category, select FX majors, and then Euro USD, and you'll be off to the races. Just like us here today. Coming into showtime, we're seeing about 49, almost 50,000 contracts on the tape out there in Euro USD. So a pretty active contract. Obviously, it's no Euro dollars, but it's also no lean hogs either. It falls somewhere in the middle out there. In terms of where the action is this week, it's out there in the DEES contract. Nearly half, 46.3% of the paper going up in that DEES contract. Let's look out here. Craig was talking about implied vol. Let's see what the implied vol is in the DEES contract for Euro USD. And coming into showtime, it's about an 8 1/3. By the way, I should mention that future of 1.16 out there. That puts it off about 0.02 out there. So ever so slightly, not quite 2%, about 1.7% decline on the week. So a little bit of move out there. But again, we have some big events on the horizon. That vol in that DEES contract, which obviously extends through the election and beyond, is at about an 8 1/3. That's ticking up about almost a full point. So that's a pretty big move. And a contract that doesn't have a ton of vol, gaining nearly a full point, that's a pretty sizable increase in terms of volatility. So obviously what's cooking out there with the election and what Craig was just talking about with some of these other events out there is contributing to a little bit of vol on the horizon. In terms of where the skew is lining up, last week we saw a decent little bid emerging to the puts. They were about 2.5% rich to the at the money, so not a huge bid, but something was percolating there. That has gone away completely this week, which is kind of interesting. In fact, the puts are now pretty much in the opposite direction. They're almost 2% cheaper than the at the money. So they've kind of swung a complete 180 over there, which is kind of interesting. The calls also last week kind of unched. They were about a 0.25% cheap to the at the money, so effectively unched out there. So there wasn't a huge skew going on last week. The puts were pretty close to the at the money, and the calls were pretty much unched as well. That has changed this week as well. The calls are now about 4.1% rich. So again, maybe not surprising, that big move in vol obviously driving some of that change as well. But the calls making a pretty big swing, and the puts as well out there, which is kind of interesting. So calls bid and puts coming in pretty aggressively out here in December. Let's see if the options activity can back that up. And yeah, it was the 1.12 puts that were dominating the tape out here this week. Nearly 10% of the volume going up was in these puts, about almost just a tick under 5,000 contracts going up out there this week. The big day was actually Monday. Almost all of that paper went up on Monday, listeners, about 4,600 and change. So a lot of paper, pretty much all of that opening. So a lot of opening paper there on these puts. I'm going to go out on a limb and say maybe that was someone selling some of that, crushing some of that vol, obviously, because we saw those puts and that put wing come in substantially over the course of the week, and certainly post that trade. Outside of that trade, let's see what else was lighting up our tape out here. Let's go to the 1.17 puts. Obviously, some interesting strikes out here if you don't follow FX too regularly here, listeners. You saw those doing about 2,400 contracts again Monday, the big day with 1,100. So maybe some opportunities for some verticals or ratios there. The 1.12 and 1.17 puts, they went up not quite on a 3-to-1 or even a 4-to-1 ratio, but pretty close to it. That'd be a funky ratio if that was indeed the case. But both strikes and both options were opening there on Monday, which is kind of interesting. The 1.17 puts also traded more throughout the week. They did another 1,000 nearly on Tuesday as well. So interesting paper afoot. Let's look a little bit farther out to see if we can find any interesting. Sometimes with products like the energy products and indeed the metals, we often see some interesting outlier trades in the farther off months. Doesn't seem like that is the case here this week, but an interesting rundown nonetheless. Mr. Sean, I know when we first talked about this FX volatility converter tool back a month and change ago, you were pretty excited about it. You were lobbying hard behind the scenes to get Mr. Craig here on the program. So you have any questions for our guest in the CME Group hot seat this week, sir?
I do. Craig, great to hear your voice. Great to be on the show with you. Welcome. I haven't seen you in quite some time, so I'm hoping you're well. It's just really fantastic to have you on the show, first of all. And I do
Thanks,
have
Sean.
a couple of questions. Oh, you're very welcome. And I look forward to seeing you after on the other side of this
Absolutely.
Corona stuff. I really look forward to seeing you again. So my two questions. One is a really interesting tool to be able to analyze using this volatility converter tool. Uncleared margin rules. So my first question is, what's the margin, the initial margin and variation margin difference between cleared and uncleared? I'm seeing that there's going to be a real gravitation towards using listed foreign exchange options clearly at CME Group going forward because of these rules. So it sounds to me like it would be just dramatically more expensive to continue to stay in the OTC space for these trades. That's my first question. And then my second question is back to the tool itself. I think you said that this is a tool that has a price delay, but if you were to use one of the conventions, one of the trading platforms, like I think you mentioned Liquidity Direct, is there an ability to use this volatility tool real time with any of the existing platforms at CME, or is it always just a delayed price? So those are my two questions: uncleared versus cleared, and then the tool itself.
Well, thanks, Sean. I appreciate it. Let me start with the second one first. Yes, we have a platform called CME Direct, where the tool is actually available within CME Direct in a live fashion. So it's basically instantaneous pricing that you can track. And, of course, the tool itself, and we've had a lot of feedback from clients saying, why don't you turn the tool into an execution facility? And maybe this is something we work on in the future, but it's really strictly an information tool at this stage. But then once you get the information, if you're already within CME Direct, you just, use CME Direct to actually, trade on the strategy that you just analyzed. Of course, if you're using the web, you would look at the prices, make a decision, and then turn to your own trading platform to actually do the trade. But it is available real time in CME Direct, where it's very easy to go from looking at the analyzing the strategy to actually doing the trade. In terms of the uncleared margin rule, the big difference is that for years, the OTC didn't require any initial margin or variation margin for most participants, right? Everyone traded on credit. And so any sort of introduction of initial margin and variation margin requirements increases the cost of trading for these participants. And in some case, we've done some analysis that shows that, it's pretty drastic difference in terms of the cost of staying on the OTC in a bilateral fashion and exchanging initial margin, variation margin versus coming to CME where, it's always been part of the process, but it's extremely efficient because you basically, all the positions are netted to the central counterparty. So on the OTC, the big cost factor is if you have multiple counterparties, then you're exchanging initial margin and variation margin with all of these different counterparties, and that can become very cumbersome. So that's the big difference, and we think that, clearly the We've seen some movement of OTC participants looking at a solution and migrating towards futures, and I think that's going to continue over the next couple of years.
And that also leads to, if I could just add a kind of a follow-up, if you're trading multiple currencies, there's margin offsets and there's different credit efficiencies from a clearing perspective as well. That's correct, right?
Correct. Exactly.
Cool. Very exciting.
Very much so.
Looking forward to checking out this tool.
Good stuff indeed. We want to talk about FX probably for the rest of the show, but there's some other products we have to squeeze on. But we'll get to some more FX in a little bit, I think, when we get to our listener questions. Now it's time for us to move on into another product category I know you guys are pretty interested in right now. It's time to talk some equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right. Welcome to Equities, listeners, the portion of the program where we break down all the options action in things like small cap and break down all the vol and movement across your favorite indices out there as well. Let's set the table. Obviously, a lot of vol on the screen this week. Of course, the election is looming next week. Stay tuned for a big election night special coming up. Obviously, next Tuesday night should be a fun one out there. But of course, hot on the heels of some large sell-offs this week as well. A little bit of a rally on the screen today, but we had some vol creeping back in, or should I say really exploding back in there earlier this week. As of a few minutes ago there, we saw RVX threatening a 41 at about a 40.87. That puts it up about 7.5 handles. Yes, that's a lot of juice, listeners. 7.5 handles in the old VIX of the Russell 2000. A VIX itself coming into show was at about 36 and about a quarter or so. That puts it up 8, not quite 9 handles, but about 8 3/4 handles from where it was this time last week. Our old friend, the VVIX, aka the volatility of volatility itself, almost at a 143. That puts it up a whopping 28 1/4 handles from this time last week. And the newest addition to the volatility landscape, which we'll be talking about on the show in the near future, that's VolQ, aka the at-the-money vol of the NASDAQ 100. It's at about a 36, almost even. That puts it up almost exactly 4 points from where it was this time last week. And in terms of the spreads you like to watch, which is primarily the small cap to large cap spread, aka the RVX to VIX spread, that's at about 4 2/3 of a point, which puts it up a little bit more than a point wider than last week, about 1.15 points wider than last week. So a lot of stuff afoot. Before I break down all the action in RVX this week, sir, Mr. Sean, what's been lighting up your tape in small cap land this week, sir?
You know, it's Thursday. You'd think it was Friday. With the excitement of this week of market volatility and movement. As you said, the spread, RVX up dramatically, VIX up dramatically, and the spread is wider, just slightly wider. But again, our Russell 2000, as I very, very excitingly say, outperforms in both directions. And as you saw, the Russell 2000, I think you said this week so far it's down, 5.8%, almost 6%. Again, this upswing in COVID infections dramatically affects small caps, them being domestic, right? So there's states shutting down cities and businesses and limiting folks getting into inside places and lots of new restrictions. Europe is shutting down. So this global pandemic is actually making this big swing, and it's affecting small caps in a dramatic fashion. But again, as we get more careful, and there's we got the election, which is just adding volatility to the market as well, is keeping these markets moving. Today we see a nice resurgence. There's obviously other data that comes into this market. It's earnings. It's things keeping the market moving in both directions. So, you know, I think I said it 2 weeks ago, put your seatbelts on as we head into this election season. It's going to continue to be interesting. We actually, a couple of days ago, FTSE Russell put out a nice blog on U.S. presidential elections and our index performance. And I think the headline is "Watch the economy, not the outcomes." this is more an investor type of focused blog. And you can get our blogs at FTSERussell.com/blogs. And I'll remind everyone on the show where to go at the end of the show again. But interesting article that our Philip Lawler has put together in regards to the months surrounding the last 5 elections. And this blog has a nice graph of index performance. It's really interesting to see yield in bonds and also the large and small caps Russell 1000 and Russell 2000 small cap indexes, how they performed during those 3-month periods in the last 5 elections from the years 2000 to 2016. So some really interesting analysis there. Please go to our website. And as a matter of fact, I'll even have Mark and Gene blast this out through their channels so that you guys can just see it right here from TWIFO. But really interesting times. And again, keep the seatbelts on.
Yeah, we just had a listener ask us on one of our other programs about some historical context for the elections, and this blog provides exactly that. So check it out, listeners, over there at FTSERussell.com. We'll tweet out the link for you as well. But it's got some interesting nuggets here. It breaks down what happened in 2000, of course, not just the election, but in the wake of the tech bubble imploding. 2004, as they term it here, the Fed tightening cycle. 2008 is when quantitative easing began in earnest. 2012, we had the recovery and some more easing out there. Then, of course, 2016 and all the fun that unpacked there. So a lot to digest. This is a pretty interesting chart here. Let's see what else is interesting out there in the realm of equity options today. Coming into Showtime, we're seeing on the week the Russell 2000 at about a 1557. So a lot of people were talking about, can it maintain north of that 1600 level? And of course, in the wake of the equity annihilation we saw earlier this week, the answer is no. And coming into today's show, it's off not quite 5% since the start of the week here, about 4.75%. They're about 78 handles, so pretty big move to the downside. We do see small caps tending to lead the charge to the upside or to the downside these days. And this week, at least for the time being, it is to the dark side. Of course, we're seeing a little bit of a turnaround out there today, so it'll be interesting to see how that unfolds and maybe if that changes that narrative by the end of the week. In terms of where the action was, kind of hard for us to parse this from an options perspective because, as the equities like to do, it's all in the weeklies, and in fact, it's all in the daily contract right now. The contract that's going out tomorrow is dominating the tape with almost half of the paper going up out there. But it is worth noting the big, most active contract is the 16 half calls, which is kind of surprising. Not the strike I would have guessed. I could break down, of course, the implied vol and the skew and stuff, but you know my feelings about doing that on a contract that has 1 day to go. Those numbers are kind of meaningless at this point. But interesting nugget and kind of surprising to me that it's the upside calls, almost 100 handles out of the money, 16 half calls that are dominating the tape out here in the Russell 2000, followed hot on its heels by the 1710 calls out there in December. Also pretty active out there. If you're wondering, by the way, the vol out there in December is at about a 35.84, up 7 points just this week alone. Still a little skew out there as well because December a little bit more relatable contract, I think, for most of you. Obviously, that goes through the election and beyond, so some interesting things being priced in there. Those puts were about 18.6% rich at the money last week, and they're pretty much the same, 18.7% this week. So these puts have been frothy, have been juicy for some time, and they're maintaining that level of elevation. The calls were about 15% cheap. Calls getting a little bit of that bid back. They're only about 14% cheap now. Maybe not surprising when vol itself is rising by 7 points. You're going to get a little bit of an uptick out there in the calls. Also worth noting that's where the 1710 calls were trading out there in December. So upside calls, the order of the day in small caps, which is kind of interesting. We don't get a chance to talk broad S&P really quickly. Let's talk a little bit of that here as well. Let's go out to the E-mini. You can find this in the same drop down that you find the Russell 2000. Of course, listeners out there, just go to E-mini. I like to hit select all, but be warned, that's a lot of data for you guys to parse on your screens. Coming into Showtime, it's the same deal, actually, which is kind of interesting. Actually, a little bit different because we're seeing a lot of action in the DEES contract, which is kind of surprising. You think you might see more action in the weeklies, but no, it was the DEES that had about 18%, but it was that 1 day to go contract has about 28.5%. So that 1 day contract, once again, stealing the thunder. The E-mini coming into the show is about 33.20 off about 131 handles. actually exactly, which is kind of interesting. That's nearly 3.8%. And the lion's share of the paper are the 3,200 puts. So slightly out of the money puts with 1 day to go, doing about 46,000 contracts out here this week. So that's kind of where the action is across the equities. We touched on it earlier, though, in our movers and shakers before we get some of your questions. Energy is pretty much dominating the tape out there to the dark side this week, listeners. We haven't had a chance to talk about energy. Usually it's a pretty frequent staple here on the program, but the last few episodes we've been waylaid by other products taking center stage. So I know a lot of you guys like to get your energy fix, particularly WTI. We'll do that now.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
Of course, you guys know where to go. Go to that drop down, go to energy, select WTI, and then you're off to the races out there. Like we said, an active week here for WTI. Since the beginning of the week, it's off another 3.5 handles or 8.88%. So a rough week here in WTI. We've been saying for a while the options paper seems to be fading any move or any sustained activity north of the 40 handle, and that pretty much has proved to be prescient because we've been south of 40 now for a while out here. Let's see. Coming into the show right now, it's the DEES contract where the lion's share of the action is nearly 60% of the paper, 57.8. That's a pretty strong aggregation. If you're wondering, by the way, they're closing in on 600,000 contracts out there in WTI this week. So a pretty active week. And the vol in that DEES contract up a whopping 17 points, listeners. It's over a 60 volatility right now in WTI, 60.61. To give you some frame of reference, that is certainly more volatile than a lot of the large cap equities you're looking at out there. Like Apple used to be a 60. It's come off from that. I don't think Amazon is even there. It's more volatile than Bitcoin. That's more volatile than a lot of products out there right now. So energy, even the DEES contract, finding a little bit of vol infusion this week, up 17. That's a huge move from a vol perspective. Let's see what's going on from a skew perspective. Obviously, that big of a vol move, you'd expect some movement in the skew, and ironically, you didn't see a lot. The puts were nearly 17% rich to at the money last week, 16.8% to be precise. This week, they're 17.5%, so up about 0.75%. That's about it. The calls, 13.2% cheap. This week, 12.6% cheap. So the calls a little bit less cheap, puts a little bit more bid. That's pretty much about it. That's surprising, given the monumental increase in vol we saw this week. If you want to break that down more for yourselves, there's a great tool built into these reports called the Shift and Slide tool, which will show you exactly how much the skew shifted and also slid along the predetermined skew paths. Kind of interesting stuff. I encourage you to check it out if you want to get a little bit deeper into what's going on out there on the skew side of the fence. In terms of the number one contract out here this week in WTI, it was the 45 calls. That's surprising. That's not exactly the strike I would have picked when we're well shy of the 30, or I should say the 40 handle. But no, the 45 calls doing 26,275 contracts. So a pretty active week. Almost half of that exactly, 13,755 coming on Tuesday, about almost 9,000 on Monday, the rest scattered throughout the week. So it was back and forth because that big chunk on Tuesday was only slightly opening, which is kind of interesting. So net, not a lot of bias in one direction or the other on this slew of paper on the 45 calls. Probably why we didn't see a huge skew move as a result as well. A lot of back and forth paper on the 45 strike this week, which is surprising. Would not have been my first guess for where I thought the action was focused this week. Number two were the 33 puts. That makes a little bit more sense. That's only about 3 handles and change out of the money right now. They did 23, almost 24,000 contracts. The big day was yesterday. 12,500 going up on the tape. Almost a little over half of that actually looks like opening. So opening paper on the puts on the 33 strike out there. Another 10,000 trading today. So that's been a pretty active strike as well as we move south through the 30 strikes out there. Then we saw the 40 calls. Again, that one makes a little bit more sense with almost 20,000 contracts. Even the big day is today. 8,200. The rest kind of scattered throughout the week. Again, similar story. Obviously, we don't know today's OI change, but the rest of the week, a lot of back and forth on this strike as well. No real net movement from an OI perspective. Again, probably why we didn't see a huge swing in the call skew this week. And then number 4 were the 36 puts, doing about 19,001 exactly. And that makes sense as well, because that's pretty much the at-the-money put. The big day was yesterday for those, about 10,200, going up over half of those opening. So opening on the put side, yet not enough to really translate into a big change in the skew. We saw the puts get bid up about 0.75 of a point. Of course, some of that's going to get just washed out by the huge increase in vol out there as well. But interesting stuff nonetheless out here in all things WTI. We can spend more time on energy, but I want to make sure we get to some of you guys here on the program. So without further ado, it is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your segment, the Futures Options Feedback segment. Got a lot of questions. Let's see how many we can get to here. First up, Mike. Mike has a bunch of questions. Usually we limit you to one, Mike, but we'll be charitable here. We'll let you get a couple in. He says, I'm new to all this future stuff, so please allow me to ask some noob questions. Well, you're not a noob, Mike. You're just trying to learn. First off, he says, am I correct in saying that futures options are a derivative of a derivative? Well, that one's pretty straightforward. The answer is yes. Obviously, a future is a derivative. An option on said derivative is a derivative of a derivative, as opposed to an option on a stock. Obviously, a stock, not a derivative. So a little bit of a different beast there. He says, question number 2, and futures trading, I know you only put up a portion of the contract's worth, but I'm confused as to its cash position, especially in commodities. Like, who owns the barrels of oil? And where are they going if the contract just ends in a cash settlement? Did they ever even exist? Metaphysical question. Or does the contract eventually end up with someone who actually wants the physical goods? And number 3 says, I'm tempted to trade ag options, maybe corn. Am I nuts? Well, maybe, Mike, if you don't understand some of these concepts, maybe you should hold off on slinging some of the corn options. Even though if you're going to pick an ag, corn is a good one. It's one of the more liquid ones out there. So that's probably a better starting point than some of the more esoteric ags. But maybe you get a better handle on this stuff first, and then maybe you go to whatever broker you're using. You try some paper trades out there first just to make sure you have an understanding of this. But the second question, let's see, also the barrels of oil. Well, the good thing is that the WTI contract, not cash settled, so you don't have to worry about that. And the oils do exist. We talked about this before. People have this weird misconception. You're going to trade these contracts and this giant truckload of oils is going to show up at your house or truckload of corn, whatever. Pick your product. They have this fear of that. And we talked about that before. We've debunked that many times on this show. That is not going to happen. But maybe, Craig, you can walk Mike through some of his questions. In particular, number 2, maybe you could work him through a little bit of how it works with putting up that initial margin on the future, because it is different than going out and just buying a stock, Craig.
Yeah, absolutely. I mean, basically you need to have an account set up and, with a clearing member of the exchange. They'll require you to put up some money to handle, the risk of an initial position. But basically, on a daily basis, your position is mark to market. That generates what we call a variation margin, right? That variation margin is paid in cash. But then there is a risk calculation on your position, and that risk generates a initial margin call. And so basically the clearing member will make sure that you have enough money on hand to cover that initial margin call, as well as, moving the money from a cash variation standpoint. But that initial margin call, depends on the product that you're trading. And it's related to, basically the risk of the position. So the volatility dictates, the amount of margins that, the exchange will require for you to post. One thing about futures options, it's very much based on 1 day's risk. And of course, they've done, tremendous historical calculations to see what they need to keep on hand, to make it safe for the entire, system. But yeah, that's how it works in futures options.
Well done, Mr. Craig. Sean, anything to add here for our listener, Mr. Mike, who's got some, as he puts them, noob questions about futures and futures options, sir?
I'll just sprinkle a little bit more into Craig's answer, which was a fantastic answer and textbook, if I was to say so myself. He's absolutely right. The only other component that I would add is the notional value of the underlying contract. The futures contract is also one of the pieces in the equation. Some of them have larger notional values than others. So that is also part of the equation. Now, on the cash side of the trade, if you're trading stocks, you have to think about it's a different regulator. Number one, it's the SEC versus the regulator in the futures world, which is the CFTC. SEC has what's called Reg T, which is a margin requirement, which is if you're trading stocks, you have to put up 50% of the notional value of the stock trade as margin, rather than a small percentage of the trade that you see in that's required in the futures industry. So there's definitely a different cash requirement, SEC regulated product versus CFTC regulated product.
There you go, Mike. Hopefully that helps you talk you off the ledge a little bit. If you still have questions, hit us up. We've talked about that many times, the whole myth of the truck showing up to your house. You don't have to worry about that. But still, it persists. It's very persistent out there, that myth. So good stuff. Yeah, maybe if you're interested in ag options, you check out corn. Go to your broker, maybe do some paper trades first, get a feel for how it trades, the liquidity. Make sure you have a handle on all these very basic concepts we just talked about, and then maybe slowly but surely you can start diving into those waters. Well, Craig, actually, this is good timing to have you on the show. We don't get a ton of FX options questions, but we got one here from Junebug. This is right up your alley. Junebug wants to know, what would you recommend as the starting pair for equity options traders looking to try their hands at FX options? Great program. Hoping to hear more FX on it soon. Well, hopefully you were listening today, Junebug, because we did a whole bunch of FX at the start of the show. I have some ideas on this front, Craig, but obviously you hang your hat day in, day out over there on the FX options side at CME. What would you recommend here for our listener who's obviously got some experience with equity options and is thinking about maybe trying their hands at FX options, sir?
Well, I think I would recommend looking for, the most liquid currency pair at CME, and that is, the Euro USD FX pair, right? It's the dominant pair globally. It is, we reflect the same sort of profile. It is the dominant pair at CME, and so it has, the most liquidity of any pair. That's the same on the options side. So for any participant that is starting, I highly recommend starting with the most liquid pair. This ensures, the lowest potential risk in terms of liquidity. Of course, sometimes there isn't much going on in a particular currency pair, so some pairs are more in play than others. So it's important to kind of keep your eye open. For the most part, all pairs are very liquid at CME, particularly the G5 currency pairs and the options associated with the G5 currency pairs, and that would be Euro, Yen, Sterling, Aussie, and Canadian dollar. So all of these have, really good liquidity. But as a first, dip your toe in the pool kind of move, I would go with Euro.
You took the words right out of my mouth, sir. Euro USD, a great starting point. Obviously, I'm assuming you're based here in the U.S., Junebug, so the dollar is a no-brainer. You got to be dollar denominated. And then, of course, what other currency is probably the most watched, most tracked in relation to the dollar? Craig just nailed it. It is the euro. So that Euro USD pair makes the most sense from an options volume perspective. It certainly is up there as well. So you have a little bit easier time finding some liquidity. Get a sense. Same thing I said to our listener there, Mike, as well. Maybe if you're still a little bit new to FX, maybe you do some paper trades first, get a sense for how these products flow, because the skew is going to be different than equity options. The volatility is obviously going to be different than equity options. The paper flow, all these things maybe you become accustomed to in trading. I'm not sure what you're trading in the equities. Could be indices, could be large names, whichever one you're trading. It's going to be very different in FX. So probably develop a little bit of a feel for it first, and then you dive in with maybe some small contract trades, and you get going from there. But this is an interesting time, certainly, to be exploring FX. Of course, we have not just a big event coming up next week, but there, as Craig mentioned, there are other developments on the horizon stretching into 2021 that should make FX more interesting in the years and months to come. Unfortunately, that music means we've come to the end of this episode of TWIFO. I want to thank our guest out there in the CME hot seat, Mr. Craig LeVeille. And Craig, as we kind of just discussed, there are some interesting things afoot in the world of FX. So maybe, like our listener Junebug, if they want more information on FX, or maybe they want to learn more about your volatility converter tool, where should they go? What should they do, Craig?
Well, they can certainly go to our website, cmegroup.com, and I just recommend going to the search button and just typing vol space converter, and it will direct them, pop them right into a vol converter page. And on the page there is all kinds of information about how the tool has been built, the science behind it, if you will, and actually the tool itself is displayed, and they can play with it and see. You know, again, it's 15-minute delayed market data, but it is fully functional.
There you go. Check it out. You know where to go. CMEgroup.com is the place to go. You can search right on into the FX and get all that good data, links to the tools, and all that good stuff, and a lot more. And Mr. Sean, same question for you. If folks are interested, maybe they want to check out that study you guys just put out looking at the different historical election periods, how they've impacted equity volatility. Maybe they have other questions. Maybe they want to check out some of the webinars you guys just did. Where should they go? What should they do, Mr. Smith?
Thanks, Mark. Just quickly, Craig, great to have you on the show. Fantastic presentation. I am going to be looking at that vol converter tool and checking it out. And you can count on that. And again, thanks for diving into FX with us today. FTSERussell.com/blogs for that election analysis that our Philip Lawler did. It's a fantastic look at the last 5 elections. And if you go to FTSERussell.com/webinars, we just last week did a fantastic webinar, What's Driving U.S. Equities. We had experts from FTSE Russell. We had Tim McCourt, someone who is near and dear to Craig's heart, and colleague, and a fantastic lady from iShares to do analysis on large caps versus small caps in the recent volatility in the markets and in the outperformance of the U.S. equities to date. So a fantastic webinar that you can easily find at FTSERussell.com/webinars. And again, you can always come to me, smith@FTSERussell.com. I'm happy to send you the link. You can get it from Mark here. Mark, I also wanted to just let you know I'll be seeing you Tuesday, right?
That's the plan for our big election night extravaganza. Should be a fun time, Mr. Smith. That kicks off at about roughly, I think we're planning 6 p.m. Central here, and it'll go on through to some unspecified time. You know, we'll see if a lot of things are popping off in the markets and a lot of things are happening. We'll certainly stay on for a while. If things seem like they're pretty much determined and not as much developing in the markets, maybe we won't go as long. We'll decide on the fly, but it should be fun. We'll have Sean joining us and a whole host of other compatriots from the network and indeed beyond throughout that special. So it should be fun. Clear your calendars. Election night. Don't worry, we're not going to get political, any sort of this candidate is great, this candidate is bad. It's going to look at the impact of the returns on what's going on in the marketplace. I look forward to seeing you there, Sean. I'll also look forward to seeing all of our listeners there as well. And on behalf of Sean and Craig and the rest of our friends over there at CME, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. Keep them coming. And we'll see you back here tomorrow for Volatility Views at noon Central, 1 p.m. Eastern. Then it all kicks off again on Monday. As Sean just mentioned, Tuesday we got the extra special election coverage coming up. That should be fun. And then we go all the way through to Thursday and another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.